this capacity to deal with all these data so quickly permit machine to get trends on market sentiments, on new trends, on new investment themes much quicker than human. Then the human is still necessary there to understand if this correlation that has been captured by the computer has any meaning.
Hello, ladies and gentlemen, and welcome to this week's Tea Break alongside my co-host Yuri. Joining us today is Fiona Frick, an investment management leader for 30 years and founder of Circe Invest consultancy. Fiona, thank you so much for joining us, and I have to start by asking, what tea have you gone for?
My drink is a green tea. I think it's not as exciting as coffee, but not as relaxed as herbal tea, but perfect balance, and it has a green touch, which is important for me because a lot of the investment advice and consulting I do is a mixture between return, risk and sustainability.
I've had to go for the English builder's tea. It wasn't my first choice, Ali. I was going for the Parisian Café au lait. But the baristas upstairs, delightful as they are, they ran out of some of the key ingredients. So I had to settle for the builder's tea. And I'm sure the reason is because the French vector of political analysis is so important, with the French government having collapsed, Paris moving now to the periphery of the Eurozone. Fiona, what does this mean for the investor in continental European equities?
European investors have realized that they were overweight in the US, be it in treasuries, being it in equity, being in private assets, private equity, etc., and really a will to come back to Europe and diversify a bit of the US. There is a different story between the bond market and the equity market. So the bond market, I think what's happening in France, and France yield now close to peripheral countries like Spain, Italy, Greece. European bonds are not yet a diversification from a US Treasury. They don't have the liquidity, they don't have the solidity, they don't have the breadth. Nevertheless, European equity is still a story. In terms of valuation, it's around 15 times PE versus US, which is plus 20. They have much more dividend yield, like around 2% more dividend yield, which is quite an interesting characteristic in this defensive environment. And there is all this story about reindustrialization of Europe around armament and energy. So it is still an important theme in European investors.
And Fiona, sticking with Europe, we've seen the recent use of Russian drones entering Poland's airspace, and of course Polish and NATO aircraft rushing to shoot some of them down. And we've had several articles about European defence and energy, one by Hannah Iqbal, looking at how European countries have joined together to combat this Russian threat to Ukraine, and now maybe Poland as well. With the defence industry a major investment theme, and one by Didier Duret about the nuclear renaissance for portfolio managers. Are those themes reflected in priorities of asset managers you speak to at the moment?
I think European resiliency is a theme, and European resiliency goes into two fronts: is defense and energy sovereignty. So defense, we've seen with the US scaling back from NATO and Russian coming in and trying new things every time, like Poland in the last day. There is a need for Europe to increase defense spending. We've spoke about the 5% of GDP, and there is obviously a willingness for investors to follow that trend, because there is fiscal policy needs in Europe, which makes that public funds will not necessarily be available as much as we expect. So there is an expectation about private capital and some good yield for return. We've seen that obviously in the public market with the success of the Rheinmetall of this world, with equities in defense. We've seen that there has been an ETF on European defense, which have been very successful. But what also is really interesting is the VC market. There's a few unicorns around defense, and what is interesting also is defense has been redesigned. It's not necessarily the old defense and the tanks and the planes, but it's all about drone making, cybersecurities. In regards to energy, obviously there is a willingness of Europe to be less dependent on fossil fuel and gas because of the Russian dependency before the Ukraine war. And this goes with the barbell strategy. So it's renewables, solar, wind in one space, and the other space is nuclear.
We've had a whole supplement, a special report looking at the financial centres in the region, and Switzerland, London, still very much at the core Dubai, where you've been sampling the delights, I think still at the periphery, Ali, but moving steadily to acceptance by many asset managers. And Luxembourg, I mean, it's my pleasure and for my sins maybe to be a frequent visitor there. You know, they've been in the fund administration and custody business, but still moving slowly but struggling to be accepted as a core financial centre, perhaps in investment management. Fiona, we've been on panels before in Luxembourg about this topic. Is Luxembourg consigned always to be the back office of Europe, or do you see more talent being attracted there?
Luxembourg is more than just a back office center. It has become the cross-border center of distribution, and every asset management has a Luxembourg CCAV. So I think when I look with my Swiss hat, as I'm a Swiss person, we are very jealous of that success, and this is really a great success. I think the problem for investment manager, there needs to be a cluster, and for the moment there isn't this cluster in terms of CIO, asset management, etc. This cluster is more in London, obviously, in Paris and in Frankfurt. Nevertheless, I think Luxembourg has two cards to play, which they are playing very well. First is sustainability. They have been very good in green bond emission. They have been very good also in developing blended finance, which is the mixture between public and private capital. They are playing the card of being one of the European Centre for Sustainability. They are playing a lot around tokenization and blockchain technology, the future of asset management. They can, by these two avenues, go in different aspects of the value chain of investment.
And this innovation and technology that you're talking about, Fiona, we've had an opinion piece from Pavel Skripek of the Omphalos Fund, and he's talking about where the AI can effectively navigate real markets better than human fund managers do. Fiona, you've always embraced technology, coming from that quantitative methodology school, and you were running that minimum variance strategy. I was having a discussion yesterday with some active managers, and they were talking about some of the trends in Asia, like the Lububu toys, for instance, a cultural phenomenon sweeping that continent. And they were saying that the quants and the AI, they've been spotting these cultural investable trends before some of the human portfolio managers. Is that telling us that the time is really finished for the human portfolio managers, that AI is able to do more and more?
The role of asset management is going to be redefined by technology. What the story about Labubu that you say, what is amazing with AI and machine learning is that this capacity to deal with all these data so quickly permit machine to get trends on market sentiments, on new trends, on new investment themes much quicker than human. Then the human is still necessary there to understand if this correlation that has been captured by the computer has any meaning. And if I wanted to say a phrase which is very indigestible, I would say that correlation is not causation. And then at the end, you need to make sure that what you find, like things moving together, there is a reason why they move together, and that's the role of the investment manager. What machine learning is doing, it's trying to reinvent active management. There's been a huge trend in investment management, which is passive has shown that cost and scale can outrun conviction and complexity in terms of return. I think what AI can do is redefine active management, redefine some systematic active factors, read the market more quickly in terms of market sentiment, and perhaps in the future the star active manager will be less relevant, and it will be more about active management training the machine to be able to evolve with the market.
Mm-hmm. Well, for now, Ali, I think we still prefer having the human guests rather than the black boxes and the AI agents in the studio.
I think I'd agree with you on that point, Yuri. That's all we have time for today. Don't forget you can watch all our episodes on the PW website or the YouTube channel. And if you have any questions for our guests, we would love to hear from you. You'll find everything you need online. See you next week.